You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again. It is Education Wednesday time for a little program we call around these parts OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. Remember, first off, if you're just listening to OBC, man, you are missing out. Head on over to wherever you're getting this, to the full network. Make sure you're getting all the shows there. Nearly a dozen shows coming at you, so we will keep you fully engaged throughout the week. And of course, if you want to go above and beyond, pro Q&As, options oddities, got an awesome one coming up after Vol Views this week with our good buddy, the Oracle of New Hampshire, Mr. Matt from ORATS, who's been on this show multiple times out there. He comes armed usually with some awesome, unusual activity to talk about, so stay tuned for that. The place to get that, theoptionsinsider.com/pro. Also coming up on the end of the month, get your name in the hat there now if you want a chance to win the June Pro Trading Crate. And a man who's never won the Pro Trading Crate, but you know what? We put up with him anyway. None other than the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to the show, sir. I'm sad you've never won a crate. You can be like the Rock Lobster. He still gets angry at me to this day that he's never won one. And I keep telling him they are not open to participants on the network, only to the pro members.
Geez, Louise. What can I do? Maybe I can make up a fake name.
There you go.
Have Kathleen apply.
Yeah, there you go. Have the wife slide in there, make up a fake name. We'll never know. Just don't call it black-hatted one Dan from MTM. I think we won't figure it out then. As long as you're not that obvious. Then you're good. I'm sure the Rock Lobster should do that. His mom listens all the time. You should have his mom enter. Then she could win one. Mama Lobster. And then he could be happy because he's been angry for years that he's never gotten a pro trading crate. Just shows you, folks, on the pro side, we hold you in that much higher regard than the Rock Lobster and or Dan. As we keep on rolling, it is time to continue with the thing all the kids are wild about, Dan. They love it. Some forgotten options terminology. So who are we to deny them with episode 3 of Forgotten Options Terms? Let's kick it off. A little bit of the old options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to some options drills. You know the drill by now, pun intended. We're going in a little bit of different direction with these segments, not exactly diving deeper into a strategy or tips and tricks, but really some terminology. As we discovered, there is a lot of terminology, Dan, that has been lost to the sands of time from the world of options trading. more than enough for multiple episodes now, as we have discovered. It seemed like it would be a fun lark to explore for a few minutes on a show, Dan, and it morphed now into this is its third segment. Who knows? Will there be more? Will you folks continue sending in and suggesting, hey, here's another great forgotten topic or forgotten term you guys forgot about, indeed, pun intended. Perfect for the theme of the show. So, Dan, there are quite a few of them on there. I have a few I've thought about. The listeners have a few. I know you've come up with a few as well. So why don't we start with a MTM special? What's your first forgotten term of the show, sir?
Yeah, this one, man, I don't think I've heard this in a long, long time. Maybe some trading desks still use this, but oh yeah, that traded in size. Traded in size.
You know, we are probably the oddballs there. We do still use that, but again, it goes back to the unusual activity stuff. And it's probably just the old school market maker in me. I'll routinely say, oh, paper traded this for size or something like that. We'll say it when I'm talking to the flow master about flow, another former market maker. That lingo will probably slip in on occasion when we do options oddities, but it's really just through that specific lens of the unusual activity. That's probably the last time I said size. I don't use it in regular vernacular. I don't go out there, oh, that traded for size, random person. But yeah, here on the show and on the network, when we're talking unusual activity, it does still creep in on occasion, Dan. So I'll side with you. Probably lost to the vast majority out there, but for us here on the network, we keep it alive, Dan. We're fighting the good fight. All right. I will do one now. Again, this is kind of just a silly one, but this occurred to me. It's forgotten because no one really thinks about it because you don't really have to. But technically, I suppose if you think about it, we're still in it and it still exists. What are we talking about? It's the penny pilot, Dan. You remember this term? This term was new when we launched the Options Insider back, 18 plus years ago, which was, listeners, the options market's first forays into penny pricing. We all know if you've traded an option recently that options are de facto traded in pennies now. That is just the standard of the day. But when this first started, when we came in from the 16ths and the 8ths down to pennies, that was a controversial thing, kind of like adding the single name 0 DTEs are right now. People were kind of up in arms about it, so they had to tiptoe their way into it. And how do they do that? With a pilot program that listed a handful of stocks to start, and then more were added. And I guess technically, Dan, I never saw an official notice that the pilot is over, that effectively the beta program has ended for this. So effectively, we're all still living through the penny pilot. It just has expanded to encompass everything and the entire options market. Dan, I guess if you want to take this to its logical conclusion, the entire options market is putting up 1 billion plus contracts a month now is all pilot. We're all living in beta, sir.
Yeah, that's pretty crazy. I mean, why don't they just change it? Why don't they just say, oh, the pilot is over, now it's official?
Yeah, they should. I'm waiting for that press release from some exchange. Like, hey, you know what? This worked out. 18 plus years later, I think we have enough data to conclude that this is the right way to price options. There are no ill effects. We can officially say that the beta is over. Isn't like Gmail still technically in beta? So these betas will go on for decades, apparently. But yeah, this one just kind of struck me. I was like, you know what? That term is still out there and still applicable, and no one uses it for a reason, Dan, because it's absurd. But you know what? Got to bring it up here on the forgotten terms list. Dan, what else you got for us?
Okay, how about this one? Hey, man, you market, you got a bleep sound in there somewhere?
We do. We can bleep you out if you like.
Yeah. So carping the market, that was very, very a very, very floor trader type term, where you got 5 or 10 or 50 guys and maybe 2 women standing around making markets, and everybody's like, oh, we're 3 bid. And then the one guy goes 4 bid. Somebody who just like everybody else is standing pat, waiting for the broker to come down to 3. And then they're going to split it all up. And the guy goes, screw you guys, 4 bid, and takes them all. And everybody's like, what the heck, man? We're all sitting here 3 bid. You like jumped in front of us and carped the market, you son of a beep. So, yeah, although, that probably should never have been a term, because people really can't just like collectively collude and come up with the market. So like, there's really no shame in carping the market, but people would still get mad at you. So I guess most people didn't do it.
Once again, sir, I have to refer to your beloved Rock Lobster, because if you've listened to Volatility Views at all on the network, Dan, every Friday we have a game at the end of that called the Crystal Ball, where we attempt to predict the future for VIX and Vol. And invariably, someone else on the program or one of our listeners in the live chat will have their own guess for VIX for the next week. And that will be too close to the Rock Lobster's prediction for his liking. So he will accuse someone of carping him. Literally, without fail, every week it happens. So yes, we have all continued to live this long nightmare of carping. He has almost single-handedly kept it alive on the network. He'll like, you carped me. It'll, someone will be 18, and someone will also come in 1801, and he'll be like, oh. Doesn't take much to set him off, as we've learned. Lack of a pro trading crate and the carping. He doesn't get as mad at the pro members when they do it, but when the other people on the show do it to him, then he takes a lot of umbrage. So yes, Vol Views, we are keeping I don't know, what are the origins of that? Like do carp fish do that? Or do they jump in front of other fish? I never understood the etymology of that term, but maybe they're just people that didn't like carp. Again, some of the terms in the options world, the origins are lost to the fogs of history. So do you know what the origin of carping is?
Yeah, it's because, carp are bottom feeders, just like, like the lowest of the low, just feeding off everybody else, letting everybody else make the market, and then going in and swooping it up.
Okay, I'll take your word for it. I'm not a big fish guy, so I guess. So they are the MTMs of the options market. That you're saying bottom feeder. Oh, bam, burn.
No,
turned it around on you.
That's too far, Mark.
I have gone too far. All right, let's keep going out here to the realm of obscure things. This one, the term itself obviously is still used in a variety of things, but from an option-specific lens, a lot of people have kind of forgotten about this one. A lot of people, it happens all the time. It happens almost every time you put it in order these days. Most people don't even know what the heck is going on when they see a fill. Hey, I went to hit the bid's 40 cents. I got filled at, 43 or whatever. And there's a couple of things going on. I guess I'll combine both of these terms together. One of them is you got price improvement. That term doesn't really get bandied about anymore, but that was a big deal back in the day, listeners. That was first being entered into the space. It was a way to, because options markets weren't really displaying the tightest markets, it was a way for people to get better fills without having to display markets that were maybe too tight, too risky for market makers. So adding that notion and building in mechanisms to offer price improvement was a big deal. And one of those mechanisms, as a related term, were these price improvement auctions, AKA auctions. When you send in an order, many times these days, obviously it depends on the order type and it depends on the exchange and all these other variables, but oftentimes if you put an order in, it will be briefly routed into a price improvement auction. You might say, oh my God, they hold up my order so it can be auctioned out? What the hell? But you're talking sub-seconds here. Listen, this is a very, very quick process. And that's often how you end up getting, instead of the 40-cent fill, you got filled at 43. It's because they put it out to a price improvement auction and a market maker saw that, hey, it's just a 10 lot of these. We could step up to fill them at a little bit better than our displayed 40-cent bid. And so it's a term you may not be familiar with, but you're using it almost every day if you're trading options regularly. And oftentimes, if you're getting a better fill than you thought you were going to, I just put something in yesterday, and I was like, I was kind of busy in between shows. I was like, you know what? I'll just hit the bid on this. I wanted to get out of something. I think it might have been some SVIX upside calls. Markets were moving, vol was moving. And I just hit, I think it was actually 40 cents, which is probably why that level is in my head. And I got filled dramatically better. And I was like, oh, thanks, price improvement auction. So it kicks in when you least expect it, Dan. These are both terms, again, that you're talking not quite as old as the penny pilot, but getting close to that. And again, auction, when's the last time you thought about your order being entered into a competitive price improvement auction, Dan? Yet that happens almost every time you enter an order these days. And sometimes it works out. Sometimes you're like, I got the bid. Okay, whatever. But sometimes you get that 43 cents and you're a happy camper, Dan.
Yeah. It's something that definitely I mean, it kind of is the mechanics, but yeah, we don't really think about it anymore. It's just everything's so fast, so electronic, so digital. That,
It's like talking
we
about the
don't think
plumbing. You don't talk about the plumbing in your house. Oh, my great pipes to that toilet. They're amazing. But, you don't really say that. But the same thing with the auction and the penny pilot and the price improvement. These are terms that you still use every day, yet you don't know that you're using them, Dan. All right, Dan, what else you got for us?
Okay, so this one, I mean, this is not anything that was ever really common. I think it's pretty obscure, but the Texas Hedge. Are you even familiar with that one, Mark? Texas Hedge?
Yeah, we used to use this all the time.
Okay.
You'd see this one, you'd be like, oh, here we go. I Texas hedged it. And then, yeah, this was a common one. Again, the origins of this, I'm assuming some wild oil trader out of Texas on the future side or something like that just went hog wild and ruined it for everybody. And they created a term in his honor. But it's another one where the origins are kind of lost. But and it's probably a little bit pejorative to folks in Texas. But that said, Dan, explain it for us.
Yeah, so usually, like, say you're a market maker and you trade delta neutral, if you buy puts, what are you getting? You're getting a short delta position. So to hedge that, you have to buy shares of stock. And conversely, if you buy calls, you're getting a positive delta position. So you have to sell shares of stock. And you do this all day long. And you're just so used to it. It's second nature. But like anything else, it's second nature. Every once in a while, you just brain fart and you buy puts and you accidentally sell stock. And so now you have a negative delta hedged with another negative delta, and it becomes a bigger risk instead of a hedged risk. And that, Mark, is where that etymology comes from. Texas, everything's big in Texas. It's a big hedge. Instead of making the risk smaller, it's big.
I still envision some wild Texan in a cowboy hat in an oil futures pit in 1978, just going hog wild. And it was so outlandish. Everyone saw that and said, oh my God, never do that again, or you have a Texas Hedge. In my mind, that's where the term comes from. Yours could certainly be the right way as well, but mine a little bit more fun. Looking here in the chat, our chat saying, Nichols, a Texas Hedge. I hear that every now and then, mostly on the network. Yeah, we are victims, Dan, of probably bringing that one up every now and then as well. Again, we have a lot of market makers floating around the network, so these terms still sprinkle in, but not that often. Certainly not every week like carping, where it happens every week on Vol Views. So we don't say Texas Hedge every week. I'll give you maybe once a quarter. How about that, Dan? Or something along those lines. Not the most common of terms, but a fun one. So if you really liked your trade, listeners, and you want to double down in terms of delta, then Texas hedging is the strategy for you. This is another one, Dan. This kind of goes back to, we were talking about our show about order types. And this one kind of came on our list, and I was like, this is not an order type we hear very often. You don't even see it, really. If you go through, I went through we have a lot of accounts here, obviously. I went through some of our accounts just before the show. It's out of curiosity, like, do they even offer this? And I couldn't find it on any of them. And what are you talking about? You talk about fill or kill orders, Dan. And again, we used to see these come in once in a while on the trading floor. I think they were more prevalent then in the open outcry space because there might be a reason for that. They didn't want people really leaning on your orders. You come in, the market makers are whatever, 2 bid at 2 1/4. They said, hey, I'm 220 bid, fill or kill, get me done right now or I'm out of it. Again, as the name implies, listeners, this is an order type where they have to be filled. If you bid there for 200, you can't just take 20 and leave the rest, the 180. You got to get all 200 or the entire order is done. It also, Dan, puts in a little bit of faux urgency. You're like, oh, if you don't fill me here, I'm taking my ball and going home. You can forget selling me the privilege of selling me these calls for $2.20. I think there was a little bit of that as well, which again, that faux urgency works a lot better in an in-person environment. You can go up to an algo all day, Dan, and say, fill or kill, 220 bid. And they're like, I don't care. I'm at 225. Take your ball and go home. So yeah, that level of pressure doesn't really exist anymore, Dan. I don't know. When's the last time you even heard or saw a fill or kill order, sir?
Certainly have. You know what? Hold on a second. I kind of think
I used one this morning.
No, I did not. I definitely did not.
And then I Texas hedged it.
Hold on a second. So let's see. Oh my, do they have that on Fidelity? I want to say maybe, let's see. Trade, order type. Oh, you got to type in the symbol here. They make you jump through all the hoops. Symbol, Ford Motor, buy 100. Order type. No, it's not. At least not for stocks. I don't know. I feel like I saw it somewhere, but maybe I didn't. Maybe it's just in my mind because it used to be a thing, but it's not a thing anymore. People just don't do it.
Yeah, I mean, I used to annoy the heck out of us, which I guess meant it worked, right? You're like, oh God, you gotta fill you now, or you're taking your precious ball and going home, and you're sitting there all day. It's kind of a slow day. You're like, well, I can do that, and then I got nothing if I don't do this. So yeah, there's a lot of factors at play psychologically in that order type, Dan. And also, it's got a cool name, fill or kill. But good luck finding these. You know what? If you can find them on your platform, first off, let us know, listeners, what platform you're using that has them, and then B, let us know your success rates. If it works, if you get filled on your fill or kill orders, or if they just say the hell with you, I'm curious.
You know what? You can do it on Thinkorswim.
Toss has it. If I was going to guess a platform, that's one of the ones I didn't have a chance to check before the show. If I was going to guess a platform that has it, because they have just about most legacy order types in there. All right, we'll have to have a fill or kill pilot, Dan. What do you think? And we'll try to put in a basket of 10 orders each or something like that, and we'll see. And at midpoints are better, and we'll see what we get. A demand to fill. I just look at the computer, it'll just laugh at you, like, ding, nope, sorry, you're not filled. I reject your faux urgency. Just for fun, I'll have to put a few of those in and see how it results. Dan, what else you got for us on the land of forgotten terminology?
Oh, let's see here. How about, okay, so this is true forgotten terminology. Oh, Dave? Yeah, he's a screen trader now. A screen trader. So this is back when, you're market makers, you're standing on the trading floor. And when we first went electronic, there were some people who left the trading floor and traded on a screen. Very strange. Sat in front of a computer to make trades and looked at a screen. Do you believe it? So, yeah, now everybody does that. You don't have to say screen trader because, you can just say trader because that's a screen trader.
We all have fallen to the abyss of screen trading now, Mr. Dance. Yeah, the weirdos. Remember for a while there were guys, even on the CME, outside the E-mini pit, but they were on terminals. It was kind of weird. They were still on the floor, but they were pit adjacent, so there were screen traders on the floor. There was a weird period there where they were trying a lot of interesting things out there. But yes, I guess we are all screen traders, and we're all Texas hedging our fill or kill orders all the time, Dan. Just a wild time out here in the market. This is a interesting one. I never really adopted this one, Dan. I think I've heard you say this a few times. This is kind of some of the old school guys on the floor. I think a lot of the futures guys used to do this as well. What am I talking about? Talking about spot, and not the term spot like you normally think of it, listeners, where you're like, oh, that's the spot. Everyone's familiar with it now, usually through the lens of crypto, if nothing else. Like, oh, the spot price for Bitcoin, the spot price for Ether. You know what we're talking about. That's kind of the current trading price for that. I'm talking about through the lens, Dan, of effectively using spot as the decimal point. And I've heard you say this a few times. Oh. It's old school floor lingo. Like something's trading at $14.37. They might say 14, instead of 14.37, they'll say 14 spot 37. So spot becomes effectively the decimal point in the price. Again, it's kind of, I think, old futures terminology, but I used to hear it all the time on the SIBO. And outside of you, I'm hard-pressed to think of a lot of people coming in. Maybe some of our future shows, some of the hardcore old-school futures guys, it still creeps in there. But, Dan, you call what I'm talking about?
Yeah, I will use that. You know what? In one of my daily videos, I just used that the other day. I don't know. Yeah, I don't know.
Yeah, where did you pick that up? Are you an old school futures guy?
Not really. I mean, I did spend some time on the commodity floors, but geez, yeah, I don't even know where I picked that up. Weird, right?
14 spot 37. It still pops up every now and then. And I'm sure it confuses a lot of new listeners. Like, wait a minute, that's the spot. But yeah, it gets confusing for a lot of people out there, Dan. What else you got for us, Dan? It's already coming up again, it's our live triple header today, listeners. So stay tuned if you're listening live. We got more fun coming at you. Dan cubed today, double Dan P, and then Dan the Man Grams after that. So if you love Dan, you got 3 Dans coming at you today. Well, 2 individual Dans, but 3 times. So there we go. But Mr. Dan, before we roll out of here for today, hit us with one more.
All right. So, yeah, this one is definitely a true forgotten one. Ticket charge. Remember ticket charge? Like right now on any worthy option trading platform, if you buy an option, well, actually, they got away from calling it commission. Like they tried to trick us a few years ago, and now they call it a fee, a trading fee, but it's really a commission. So now we pay a commission and an exchange fee for every trade we make. You know, maybe it's $1 contract, maybe it's 75 cents contract, whatever it is. But it used to be when we first had online trading, we're talking back in the Options Express days. Well, there's a forgotten term too, Options Express. It used to be like, oh, okay, you pay $5.99 just to make a trade, and that's your ticket charge. And then it's whatever, 99 cents a contract above and beyond that. And that sort of went the way of the dodo once we started with the payment for order flow, which is not a forgotten term, unfortunately. But yeah, ticket charge. Remember that? Some of you folks who've traded for a good 10 years, you might remember that one.
I do recall that one. You still see it pop up on occasion, but you're right. It's usually disguised as something else now. It's just whatever they call their fee that they attach to your trade. You can't use the C word. That's evil. Commission. We're no commission broker. We just have all these fees. They're not commissions. They're just fees for trading. All right, Mr. Dan, that music means we're coming up against it in the first part of our doubleheader. If you're listening live, stay tuned. If you're listening after the fact, stay tuned on your device of choice because you'll be getting the Futures Rundown if you're subscribed to the full network with Dan Gramza. And then next week, of course, we'll be back with another OBC. But before we get there, Dan, if folks want to check out what you got cooking, where should they go? What should they do?
Yes. I'll tell you what, give my my little temporary project, my podcast project, a listen to. It's Wealth Building with Options. Wealth Building with Options, and just look for it on your favorite podcast platform. Whatever you're listening to it on now, look for Wealth Building with Options, and please give it a listen. It's about a 1-year project.
There you go. Check it out. Wealth Building with Options. It's going to do it for us on OBC today. Again, back instantaneously if you're hanging out in the Pro. Yet another reason to be hanging out in the Pro. You get next week's episode right now in your ear holes with good old Dan here, the black-hatted one. Then we're back in a little bit for the Futures Rundown. Again, live, straight to your ear holes, folks. And then we're back again next week, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.